only euro.
Yeah, I kind of guess so. Yeah.
But it's nice to look at Bitcoin every now and then because started out in Bitcoin, so.
Yeah. Do you still have a few bitcoins? You still holding, or are you still in the market?
No, actually, no. I don't hold any crypto actually.
Oh, yeah. Okay.
No, I was like maybe some time ago. I was like completely just sell everything and be like done with Bitcoin and crypto altogether. I just wanted to focus on increasing my developing my skill in forex, and that's what I've pretty much been doing the last couple of time.
Yeah. Yeah. Good point. Good point. It's always useful to be specialized, I guess, because at the end of the day, you don't really need to be able to trade a thousand of markets, right? You only need
No, not at all.
You need one asset. Being really focused on that, develop the skills that you need, and you can do pretty well as you showed actually.
Yeah.
By just trading one at one.
Well, that's actually one of
euro
the
dollar or only a euro dollar. Every now and then I like when there's like events like Christmas or something, I will look around, look on the GBP or maybe sometimes even gold, but it's a on a rare occasion that I would look at the GBP or gold or Nasdaq. Nice.
Yeah, nice.
That seems to be a common thing, though, is people tend to focus in on one trading pair. I've noticed, whether it's whatever it is, a lot of guys kind of zero in on one thing. But I think your perspective on not being obsessed with crypto is actually a good, refreshing perspective, and something I'm trying to adopt for myself. That the description of the channel we created, Edge. The channel name is Edge, and the description is market structure across a range of asset classes. And every once in a while, I'll see that description, and I'll realize that we haven't really stayed true to that. I tend to get focused on looking at Bitcoin exclusively. So I definitely want to broaden it to other markets. Now, Euro is definitely the second biggest one I pay attention to, but I think
I would in due time, right? It's you don't have to do everything right within one day or so.
Yeah, I definitely have an interest in trading commodities and equities. I think after Forex, I think I generally probably wouldn't. I'd probably stick to just Euro and not get caught up in trading multiple pairs. But I think after that, I'd be interested in getting into the commodity market, trading like coffee and different commodity futures, and just based off the I guess an underlying assumption that they're less correlated to the credit markets than like equities. If you think that would be my assumption. Now, how true that actually is, I'm not sure. But, the idea is that, if things happen in the credit markets, then, every equity is going to move together in a correlated fashion. So is crypto. And maybe commodities are less correlated to that. I don't know. But
probably, I think if there is something that recent events actually showed us, that commodities, I'm gonna state that I've never traded commodities. I've never traded like precious metals or agricultural commodities. But I would say, or I would think at least, that they tend to move relative to seasonal tendencies, or it could be much more related to supply chain dynamics, something like that. Not really related to the bond market or the interest rates.
Yeah, and that'd be something that I'd be interested in learning, just because it's a non-correlated asset. So in that sense, I kind of see it as a hedge, because you could, whatever positions you have, don't get caught up in whatever shitstorm hits the credit markets.
Yeah. If you look at what a lot of smart investors have done in the recent months, basically the energy sector was the go-to if you have money to deploy, and if you were actually inclined not leaving them in stock market, because if you look at what stock market did, basically it was in a range and slightly to the downside. So keeping your money in was basically having that money on the line. So the money weren't working for you or in your favor. But if you had a good macro picture, you could have kind of see the tides shifting, and these energy crises. It wasn't at the end of the day. It wasn't such a big mystery.
No, it's not. It really represented a once in a several years trading opportunity. And
Yeah, most likely. Yeah.
it's a good example of like, how many people were able to take advantage of that, how many.
I think not a lot, but the problem, I guess, at least for me personally, would be that, I mean, that I do like the macro, and I try to educate myself and study even, interest rates, the bond market, credit market, monetary system, but I actually never traded anything based on those assumptions or those knowledge that I have, which are pretty basic, yeah, of course. But if someone had a lot of experience in that field, of course there are ways to take advantage of it. Yeah.
Yeah, I think it kind of ties back into some of the success you had in hedging on Bitcoin, right? Where you weren't necessarily allocating a whole lot of risk to those hedges, but when they did play out, uh, they were very profitable to have them on, right? So,
Yeah.
so it's kind of like that. Like, if say you were to trade what happened in the oil market and you were trying to take advantage of that, then people, you don't necessarily need to have a massive position. I think the goal is just to be able to participate in those types of wild events when they happen, you know.
Yeah, I mean, it's a good point. For me, I'm on the same boat as Pena, if you wish. I completely ditched the Bitcoin market, and I've been focused on the Forex market. I do trade the euro dollar and the pound dollar mostly. And the only meaningful trades that I've taken on Bitcoin in the last year, I guess, more than a year, was basically going short at 58 last year, and again this year going short at 66. And after that, I basically done shit on Bitcoin.
But that's all you really needed to do, really, on the short side. I mean, of course, you may have missed long positions, but just solely speaking from the short side, you really caught the
And
big trades.
for me, the logic behind it was, I don't have the intention to be focused on this market because I do want to develop skill in another asset class. Of course, I have an exposure in Bitcoin, so it's not like I can just say, you know what, fuck off, it's gonna do whatever. I'm not interested. Well, I am interested because I have skin in the game. And I thought, okay, my macro view, it's still it's gonna go up, maybe long term. I don't know how much time it's gonna take. So if I wanna hold my spot, the only thing I would need to do is just taking care of the downside. So when I saw those opportunities, that for me was golden opportunities. I already explained that there was the time components, the news catalyst, market structure, and I thought, you know what, I'm gonna take a 5% risk on my account, and I'm gonna short this market and holding this short like an edge. So at the end of the day, those returns were basically what I've made in the last year and a half, and then I just lived on my spot position. But it was pretty comfortable having the knowledge and being aware that although the market was essentially crashing, I wasn't affected so negatively because I still had that short position, which was really working in my favor, although my spot was going lower in price, right?
Yeah, I think you and Penny are a little bit different because you hold a spot position, and it sounds like Pena just has no spot position. And
Yeah, yeah.
yeah, so those are two different beasts. But yeah, I wouldn't say there's necessarily a right way or a wrong way, I guess. So I think a lot of people find that holding crypto affects their trading in a negative way. At least I've heard that from a lot of people. So
I think for me the problem was that when you hold the spot position, and maybe you have a long-term view, or you think you're going to hold it for like 10 years, 15 years, because you see it at, as you were saying, 500K in the next 10 years, whatever, it kind of grinds up a little bit in your mentality and your psychology, because you are trading something and you cannot be completely objective on it, because you still have this inner desire to it to go up, right?
yeah.
So it's really hard to kind of divorce your actions from your hopes, your desires. It can fuck you up a little.
Yeah, I think for that scenario, I think what you did is the ideal thing to do, right? So you're not necessarily taking a short position, but you're hedging your underlying spot position. And I think
essentially, yeah.
I think that is the most realistic thing to do and the best approach, actually.
Even if you consider the time that you have to dedicate to it, because how many shorts like that could you take in 1 year? Maybe 2, 3 if you're lucky. So it doesn't really take away a lot of time.
Yeah, another thing I was thinking about was, the desire to broaden to different asset classes is probably a good desire, and you may not be able to incorporate them all very fast, right? You might have to slowly incorporate one after the other, right? Like maybe Bitcoin, then slowly Euro, then slowly some other asset. But I think it's a good goal to, try to do that, or try to do that over a long period of time, just because if in different uncorrelated markets, again, this doesn't apply to correlated markets, but to uncorrelated markets, if you're trading different uncorrelated markets, then when a black swan event does hit a particular market or markets in general, I think you'd be in a better position in that position. You think about well, I guess it depends on what happens, but I think generally, if you have exposure across different markets, you'd be in a better position. But how true that is in the future is a little bit up in the air too. So
yeah, but would you relate that more to margin trading, or more to the point of building up a portfolio of assets for the long run?
yeah, I think I would apply it to both, right? I mean, I think you would want to, if you can build out a portfolio that is investing in different assets, you can build out trading accounts that are trading in different assets. Then, to the degree you do that, it's you, in order to do that, you have to allocate less risk to each one. So if anything goes wrong, it's a little bit more compartmentalized, right? Whereas if your entire net worth is a Bitcoin long and that happens during a black swan event, you're fucked.
I think we discussed a few of these things, like when we were talking about how to build up a portfolio, and we were discussing that type of allocation that you could have in order to hedge your overall net value, net worth, because you could be exposing risk on assets like stocks or bitcoins or cryptos and whatnot. But if you're good enough to see that the tides are kind of shifting, or there is a particular amount of risk, downside risk in the market, even allocating a small percentage of your account, let's take a real life example, in the energy sector or agricultural commodities, you don't need to allocate a lot, because in the event, as you were saying, of a black swan event for the risk on assets, you just need a tiny exposure in the uncorrelated market, which are probably going to hedge your net worth so efficiently, just putting in a little bit of a risk, right?
Yeah, you sort of stopgap your downside. I don't know if you remember. There's a billionaire named Bill Ackman, I think his name is, and he he was the guy who made like billions of dollars during the March 2020 Black Swan event. I forget exactly what it was the vehicle that he did that with, but I think it was called credit default swaps. Which, to be honest with you, I don't know enough about credit default swaps to talk about, but
Yeah, I do know that only that it's some sort of an insurance type of contract that you can buy up if you think that a nation, a country is going to default on its debt.
yeah, and he made billions of dollars, so he probably had a large amount of these credit default swaps, and so he became like a hero, in the eyes of the market. But there were probably a lot of guys who didn't have any, right? I would say most people didn't have any, right? And like,
Yeah.
then it begs the question of like, why didn't you have any, right?
It's they also made a movie about that. It was The Big Short, right? About
Yeah.
credit default swap.
Yep.
Which was an instrument that didn't exist before.
Right, exactly. And again, I don't know enough about them to talk about them, in depth or in detail, but it's just kind of the framework I approach trading with is that, what makes a successful trader over a long period of time is how well you navigate those severe market conditions, those black swan events. So keeping that in mind, those type of instruments would be very appealing, right? Because those would be the type of instruments that help you navigate those environments well.
Yeah, I guess so. Yeah.
Yeah.
I mean, the more instruments you are familiar to, the more optionality you have in order to manage risk. Yeah.
So it's not like, so it kind of begs the question is if you don't have those type of hedges and protections, are you really a good portfolio manager? Probably not. It begs the question of like after March 2020 happened, like, who was prepared for that, who wasn't. It becomes obvious afterwards, but it's not so obvious beforehand.
Yeah, because if you do remember at that time, there was still this underlying theme about cash is trash, and all that stuff. And then you look at the Dixie and what happened at the Dixie during those periods, and having a little bit of exposure in bonds or having cash in US dollar wouldn't have been the worst possible choice, right? In that specific amount of time, in that period.
Yeah. Again,
then again, I guess in order to do that, you need to have knowledge about the repo market, the money market. There are different type of fields of expertise that you need to know in order to perform an operation like that. It's not something that you can grasp just because you have watched price action for like 6 months and all of a sudden you will have that knowledge spring inside your brain. You need to really study deeply how the financial system work and the monetary system work in order to be able to have the base knowledge to perform that kind of operation, I guess. It's kind of funny to tell about it in hindsight, but being there in the moment is a completely different thing. Yeah.
Yeah, and you also have to be comfortable having everybody telling you you're wrong, right? So if you have credit default swaps as a hedge and the market's ripping up 364 days out of the year, well, you have to be comfortable with people telling you you're an idiot all 364 of those days until, the day where you need it. And you're suddenly a genius.
Getting back to the movie, if you think about Dr. Burry, he almost lost everything in that operation. Eventually, he was right, but it was so early that it brings on the point of being right or wrong. It could be meaningless if you are out of time. If you are too early, it doesn't matter if you are right. Timing in that type of operations, it is an important component of that. Because it's like that infamous quote: markets can stay irrational more and longer than you being solvent, right?
Yeah, I just think it takes a certain type of person to be able to do that. When everybody is going to be telling you you're an idiot, and you're making the wrong decision, especially when it's the right decision. So